Wall Street, it usually doesn't focus on mom and pop investors, and especially doesn't focus on millennials. So, good segue into the educational segment, because on March 18th, Robinhood, which is the popular trading app, which allows you to trade stocks for free, which, by the way, disrupted the entire discount brokerage industry, right? Because now most of those platforms are for free. But on March 18th, the Robinhood app crashed. Okay, March 18th was when stocks were still going down, free fall. Most people looking to trade. Pretty crazy. And this outage came after several smaller outages on March 2nd, March 3rd, March 9th. Now, during that time, the company caught tons of heat for the outages. And they rightly should. You have people that have money on your platform that are looking to access it, whether they trade it or want to take it out, and it's not working. And it's not working when the market's in free fall, especially, I know you can't think about it now because everything's great and rosy and buying bankrupt stocks that are going higher. But when the market was in free fall, think about the 20% move to the 35% move downward. Hysteria. I got to get out. This is crazy. I mean, you just watch the media. Hey, it's going to crash. It's going to go further. You know, just pounding you with the biggest crash we've ever seen, the fastest crash. And you're trying to get, and your app doesn't work. Imagine not being able to go in your brokerage account. And of course, Robinhood fixed the problem. Been pretty much smooth sailing ever since those outages. But when the story was in the news, the financial media especially, and even if you go on the social media platforms, Twitter, and these so-called financial gurus, they were ripping them apart. They started questioning that app, if it should even exist. And the people attacking it, it makes sense, right? This is a company that's disrupting Wall Street, that disrupted Wall Street. And guys, I get it. And I get 100% as I launched our Curzio Equity Owners Token, CEO, which is a security token that allows Curzio Research, my company, to be a publicly traded entity that offers an equity stake similar to a stock. That's going to go free trading pretty soon for anyone to buy if they want. It's always open to accredited investors at first. But there's an industry that's having trouble taking off because it disrupts Wall Street and the traditional investment banking industry, which is a multi-trillion-dollar industry. And I get it. But these platforms and these trading platforms should have been up and running, and the SEC is not really paying too much attention. Makes sense. As a financial advisor, you're my lawyer, not a financial advisor, being in the financial industry as a whole, financial newsletter publisher. And my lawyer, general counsel, will tell you, don't ever talk about the SEC. But it's not in the best interest, right? Because the SEC, it's an organization that is not that large, and you're looking at everyone who's at the top, who has the best connections, goes to the Goldman Sachs, goes to JP Morgan's, and they make a ton of money, and they have great contacts there. But why are you dragging your feet on this? This is a platform that provides a low-cost way for companies like myself and small companies to go public, to access capital. And in a year from now, which is great for investors as well, is, you'll be able to trade some of these tokens. We're having to go on, try to find different exchanges where the exchanges are getting, it's tough to get off the ground. They should have been off the ground already. But you're seeing this industry really come back after COVID-19. But I get it when it comes to disrupting industry. I get it. You're going to get attacked. They're going to be pushing against you as hard as you can. But eventually, people just want something that's better. But with Robinhood, when that app crashed, I mean, those questions that would be asked, should it be around anymore? Why? The one question that was not being addressed is, why did it crash? Because the reason the app was offline is because millions and millions of people were signing up to use it. And in 2016, Robinhood had 1 million accounts, which is amazing by itself. By 2018, it had 6 million. To put that in perspective, that's more accounts than E-Trade at that time, which had around 5 million. By the end of 2019, those accounts grew to 10 million. Today, they're over 13 million, probably more like 15 million. But 13 million as of May. How do I know that? Because Robinhood just did a capital raise. They raised $280 million. get a private raise. And that was in May, which values the company over $8 billion. They said that this year, which was May, they had 3 million accounts, and I'm sure since then they have over 50 million today. Now, why is this a big deal? Because you look at 15 million brokerage accounts. This isn't people signing up to something that's for free or a social media platform where they could post. And you're putting money into an account. But why is it such a big deal? Because most of these accounts are millennials. This is the younger crowd signing up to learn about the stock market, to trade the stock market. So the reason why this app was crashing, again, which nobody really focused on or asked, was because seeing an enormous amount of traffic as millions of new accounts were being opened. And these people were looking to trade. I've been in this industry, I say it a lot, for over 25 years. I've seen everything behind the scenes, the media behind it, dealt with so many different companies, great contacts, institutions, you name it. And if you're a millennial, which I know you get criticized all the time for not working hard, for getting things handed to you, for being more of a rental crowd than an owner of assets crowd, Wall Street has totally ignored you. In fact, they don't give a shit about you. Why is that? Because they can't make money from you. For example, in the financial newsletter industry, in my industry, the average age per subscriber is around 60. It's lower for us. We attract a younger audience. But why 60? Because these are people who are either retired, close to retiring. They have the time to read a bunch of newsletters. They're sitting on a lot of money from their retirement, from working so hard for 20, 30 years, which if you're a millennial, believe me, millions of dollars sounds like a ton of money for you. But by the time you retire, if you really have your 401ks and you're adding to those all the time, especially you have companies, some companies that still match, and that stuff accumulates. It accumulates quick. It does. So financial firms, of course, love to market to these people. It's not just the financial newsletter industry, but it's investment banking firms, mutual funds, the big Wall Street outlets, insurance companies. I mean, they all focus on the older investor. That's where the money is. And you filter down, say teachers, policemen, firemen, they all pool their money together into pension funds managed by whatever, CalPERS, which is the California Public Employees Retirement System, the New York State Local Retirement System, New York City Employees Retirement System, you name it. But all these state pension systems, which have billions and billions and hundreds of billions of dollars in them. And what do? They have companies like Goldman managing them, BlackRock, Vanguard, State Street, Fidelity, Bridgewater, Renaissance, T. Rowe Price, Northern Trust. I mean, I can keep going on and on. UBS, BNY Mellon, JP Morgan, Morgan Stanley, Janus Schwab. I mean, you guys get the point. It's a boys' club. And to get in it, you have to be filthy rich. Or you have to have your money managed by one of these big retirement systems, and you'll have access to these things. They're not going to give access to you. There's a reason why you guys didn't sign up on E-Trade, Ameritrade, and all these, because they really don't care about you. Yeah, maybe you open up an account with $1,000, but how much are you going to really trade? It's not worth it to them. But now it's like, wait, not so many people are going to sign up because Robinhood, you could trade for free. We got to do the same thing that they're doing. Again, disruptive. But none of these major institutions give a shit about millennials. They don't. And you know what? It needs to change. For us, Curzio Research, we're going to make a big commitment to start helping you. Start helping millennials. And these are the people, if you're serious about learning how to invest. Now, I know since so many of you, millions of people, again, we get the Robinhood statistics, started opening accounts, been trading over the past few months. I know you think you're a genius because you invested in a market where everything is going up, and even companies that file for bankruptcy, right? Unfortunately, that's not how things work. It's working now, but it's not going to work later. And this is the kind of stuff I saw during the 80s. After the first Wall Street movie was released. I mean, it had the opposite effect, right? Oh, this guy's going behind the scenes and robbing everybody and, try to get inside information. It had the opposite effect of what everybody thought because it led to everybody wanting to work on Wall Street. Then we saw the 87 crash. The late 90s, technology. I mean, these are markets that I was in. You're excited about. Everything's going higher. You're buying it. You think you know more than everybody. You're a genius. So the market crashes. 2006, 7. I can't tell you, millennials and that were real estate agents just selling anything. It didn't matter. You need a library card. You could get a fake library card and you got a $600,000 loan for a mortgage. Why? Because you would take that mortgage in, make commission on it, throw it to Fannie and Freddie. Nobody cares. There's no risk. Well, we all know what happened. Investing in the stock market, seeing everything go higher and surge into 2007. And then we saw the collapse in housing, which basically was the credit crisis. When you're looking at the market, it sucks in young people at the wrong time. It's going to make you look like a genius. But then it's going to take every single penny from you. That's how Wall Street works. Everything. If you have 5 cents in your pocket, they'll take it. And your pants. That's how Wall Street works. I worked in it and been in this industry. I worked actually on Wall Street across from the New York Stock Exchange. That's how it is. It's cutthroat. Billionaires love destroying other billionaires. Not because they want to get richer, because that's them. That's their personality. It's normal. It's human nature. I'm not telling you all this because I'm some genius. Unfortunately, I'm speaking from experience. Because I was in the markets in the 90s during the tech bubble. I didn't lose everything because I had, my dad passed, over 15 years ago, who was one of the best money managers at the time on CNBC all the time, over 20 years experience at that time. He was there to say, son, don't be an effing idiot. And yes, he used that word. He said, listen, be smart. You invest in a lot of this technology. It didn't make sense, but take a little bit off the table. And through 1999, I'm like, he doesn't know what he's talking about. I could run this business. I'm great. Don't worry, Dad. I know exactly what I'm doing. Just like any millennial would say. Because you're at that age where you think you're the smartest person in the world. You're the best athlete in the world. You have the biggest you-know-what in the world. And that's normal. You're supposed to think like that. That ego is great. Because when you hit 35, 40, you're going to realize, wow, I really don't know shit, because you talk to brilliant people. And it makes you want to learn more and educate yourself even more. But I want to start helping you, having more educational videos, which will be live through our YouTube platform on Curzio Research. Ready to create a super low price newsletter for you. It's called the Dollar Stock Club, where I take ideas from all the guests I interview, including Charles today. And these are not just companies they mentioned in the interview, because like Charles, I'll talk 15 minutes before and say, hey, how's everything going? Okay, ready to go. And we'll talk about the markets and everything, and even afterwards. So some of these ideas I get offline, but I'll have a one-page write-up. It's like a report on all these new recommendations and put them in a portfolio for you to track. In the past few weeks alone for Dollar Stock Club, those picks include Interpublic from John Petrides, up 37% in 6 weeks. Carnival from Tom Lee, and very popular name, mentioned on TV, had him on the podcast, interviewed him. 45% gains on Carnival. That was 5 weeks ago. Frank Holmes, 2 weeks ago. We talked about U.S. Global, his Jets ETF, JETS, the largest airline ETF. Why Buffett made a big mistake getting out of these things. That ETF's up 35% in 10 days. These are the stocks that we're giving. These are from my guests, ideas that people pay a ton of money for. Not the Dollar Stock Club. I also, and this is what I would love to do, have to think about it more, make sure I have a little time for this, because I never do anything half-assed in my life, which is sometimes a problem. Whenever I try to do something, I try to be the best in the world at it, which means total focus and attention, which is not always a good thing. Doesn't lead to you just having leisure fun. It's, I got to be great at this, or I don't want to play. That's just my personality. But I want to create an investment clinic. Maybe take on 10 students. Throw you guys right into the fire. Teach you everything I know. every methodology, value, growth, technical, large cap, small cap, income, options, everything I've learned, top-down approach, bottoms up, because you're going to need to know different styles of investing. Right now, technical analysis is great, but anyone going on there talking about value is out of their mind because value doesn't matter right now. Value doesn't matter right now. You look at Shopify trading at what is it? I forgot what it was. I think it was like 12,000 times earnings or something like that. I mean, it doesn't matter valuation right now. You're going to say, well, this is cheap. You might find a couple of cheap stocks, but there's a reason in this market if they're still cheap. It's because they're terrible companies. And yeah, they're going to play catch up. Let's buy the worst industry like everybody went on and shouted autos the past couple of autos. They didn't participate. Everybody rotate that money into autos. That's good for this week. Next week, let's see what the next sector is. There's also bankrupt companies. Throw them in there. That's it. Hertz went from $1 to $5, $6, I think. Crazy. But teach you all these strategies. And guys, I'm going to throw you right into the fire. But before you sign up and get excited, just know it's not going to be a cakewalk. I'm going to be screaming on you. You're going to be working harder than you ever had. And the second you stop, I'm throwing you out of the program. But I would love to do this. Create that type of clinic. Those with YouTube followings. Help you get more exposure through my Wall Street Unplugged podcast by interviewing you, because there are a lot of YouTube people out there who are in financial industry that have lots of people following them on YouTube. It's amazing. And with my podcast, Wall Street Unplugged, thanks to you, still one of the top investment business podcasts in the industry, outside of a show like, the Kramers or the Charles Paynes and stuff, where they just take that show and throw it into a podcast, where, it's only formatted this for a podcast right now. And we're going to be doing videos through our Curzio YouTube channel, where videoing all these podcasts. But I want to be that voice, especially for millennials. And why? Why would I do this? Because I was fortunate. I mean, I had my dad to be that voice. Let me know when I'm being an idiot and not being too arrogant, not being too greedy. Because you really don't know, especially, you get people who invested in the market since the credit crisis, and all they saw was a market go straight up. And now they just saw this crash and said, wow, the markets could crash. But wait, they always jump back right away because the Fed bails out. You're being conditioned a certain way where there's a lot of risks in the marketplace. There's a reason why the greatest investors in the world, Drunckenmittel, Will Singer, David Tepper in the past 3 weeks saying it's one of the most dangerous markets they've seen. It is incredibly dangerous. You don't care right now because everything's going up. But it's not always going to be that way. It's like if you're playing golf. There's times when you go at the hole, and there's times that you don't, where par is a great score. And you want to get par, but when the opportunity presents itself, go after the flag and go for that birdie. It can't be going for the birdie every time, because you're going to hook it in the water. You're going to be off the green, put yourself in bad spots. And unfortunately, when you talk about money, if you get into the wrong spot, especially if a market crashes, you lose everything. And then what happens? You can't participate on the way up. So you don't get to be wrong. You don't get a second chance. You don't get, hey, well, this is a great lesson. No, you get crushed, and that's it. And believe me, Wall Street will crush you. That's their job. That's what it does. I remember going to conferences in my 20s, and all the people who gave me time, like Mario Cabelli, actually, Rafael Campora, Bill Griffin on CNBC, Sue Herrera used to say hi to me when my dad was in the studio about to go on CNBC. Rick Rule, when I first started at Stansberry. Rick Rule is a god in the mining industry. I sat down, asked him questions. He spent half an hour with me, 40 minutes with me. Now it's my way of giving back. Hey, you want to come on the podcast? What can I do for you? Kramer, yes, I worked for him, getting to know him close, and he went to my wedding. I mean, that stuff, you'd never forget it. You never forget it. I mean, I'm a big character guy, which is why I hate politicians so much. And some people hate that I talk politics or whatever. I try to be as fair as possible. But what are we seeing now? For me, again, character's a big thing. So you see people taking pictures in front of churches holding the Bible to target the conservative vote. Or politicians kneeling together in a masturbation hall like you give a shit about racial injustice all of a sudden. And great job getting the photographer to take the perfect picture of you so it goes viral. If you care, you wouldn't have anyone taking pictures. You just do the right thing. And look, this election is very, very close. Minority vote is huge. A millennial vote is huge. At the end of the day, these politicians, they don't give a shit about you. They give a shit about themselves and power. And a good example of that is Bernie Sanders. There's a reason why Trump was not really saying anything bad about Bernie Sanders. Oh, I kind of like him, And there's a reason why the Democrats were destroying him. They wanted to get him out of there. And yes, some of his policies were insane, but a lot of the millennial crowd followed him. But now it's funny because you had both parties found ways to attack, destroy the guy. But isn't it funny how the people who pushed him out of the race are now really playing nice with him? Okay, Bernie, everything's cool, isn't it? You just destroyed the guy. You made sure he got him out of the race as quick as possible. Why are you playing nice? Because his following could determine who the next president's going to be. And that's the truth. You guys can hold up signs. You can do whatever you want when it comes to Wall Street, whatever. Or politics and just start caring about you. Start caring about you. That's what matters. You getting a home, building assets, right? It's your life. It's your wealth. And see so many millennials figuring that out more than ever. Millions of you opening up brokerage accounts at such a young age, learning about investing. Learning how to become owners of assets, which creates wealth. You could bitch and say, wow, all these bailouts, the rich get richer. And you're right. Charles talked about it as well. That's the way the policies are structured. Low interest rates is going to inflate assets. The rich are going to get richer. You could bitch. You could hold up a sign. You can complain. Or you could buy assets. You could build your wealth. You can still complain about it and write signs and do whatever you want. But instead of fighting something that is probably not going to change, I'm not talking about the racial injustice part. I'm talking about the wealth inequality, the way the system is set up. Instead of complaining, use it to your advantage. Again, learn how to become an owner of assets. That's how you become wealthy. But it's pretty amazing to see this being done right now. I've never seen this. This many millennials getting into trading. And it is dangerous. It's a crazy market, and people are going to make fun of you who know the market and say, oh, these guys are going to get crushed because we've seen it before. But learn from this. The Curzio research, we're going to be focusing on you. And continue to have lots of free products, low-price products to get you started, educate you, teach you everything I learned about stocks for the past 25 years. And the only thing I ask in return, dead serious, pass it on. When you make it, pass it on. When you have a successful company, you become an influential person, you have lots of followers, just educate the younger generation. That's how we make the next generation better, and not into a generation that you guys are in where you're filled with student loan debt. Few opportunities. You guys are in a massive hole that's close to impossible to dig your way out of. And this happens before your career even begins. It's insane. But that's all I want you to do. It's the only thing I ask in return. Because I'm telling you, everybody that helped me get to where I am today, especially when I was young and asking stupid questions and learning, those people that helped me, I'll never forget them. And now I'm in a position to help them, and I helped a lot of them. And that's the way the world works, because that builds character. That's what you remember, the people who helped you. Okay, when you're rich, everybody wants to be your friend. When things are bad, and the people that help you when things are bad, those are the people you can count on for the rest of your life. I'm not, being philosophical or what, but it's true. And that's how you determine who your great friends are, right? When things are bad, who's the people that are there for you? Because you're going to be surprised. I learned this how many companies have I talked about and helped the management teams throughout my career? And then when I launched a token, I said, hey, guys, if you want to invest in it, nobody. The amount of people that I thought would definitely invest in it, they didn't even read the prospectus or read anything about it or see what I'm doing. And I found that pretty amazing. And I loved it. Why? Because I'm going to make every one of them pay by making this company one of the biggest in the industry and making that token quadruple, go up 10x, 50x in value. This way I could tell them, hey, look, I put it on your desk, but you didn't really have time. It's amazing. I had time for you. I learned about your companies. I do a lot for you guys. So that's why I want you to pass it on, because believe me, the people you pass it on, those people will become bigger and bigger. And that's how you make the next generation better, by passing it on. That's all I ask. So that's my promise to you, to help you guys out. I always keep my promises. You just ask my 2 young daughters, who never forget when I promise. I'm going to jump in the pool with them after work or go on a bike ride with them. They're going to remind me and text me all day, coming home, going to the pool, going to the pool. Trust me, when you have kids, they'll always hold you to every single promise that you make, which is awesome. But I always keep my promises, and I promise the millennial crowd at Curzio Research, we're going to help you. Going to give you everything I got, 25 years of experience, and really help you. Do educational videos, everything. You're going to see a lot more live videos, all this stuff. If you have any questions or comments or any ways I can help out, let me know. FrankCurzioResearch.com. That's Frank at CurzioResearch.com.